Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, hope you had a good Chuseok. Thank you for coming on today.
Good afternoon. Thank you.
Well, stocks on Wall Street closed significantly higher on Monday ahead of this week's inflation report, and partly with Ukraine apparently making progress in the war. Last week, stocks actually broke a three-day losing streak, and then on Monday, up more than 1% on the S&P, 1.25% on the Nasdaq. What's the story in the global markets coming off this holiday weekend?
Yes, as you said, U.S. market closed higher for a fourth consecutive session on Monday, extending the last week's rally that rose by more than 3 to 4%. If you look at the Dow Jones, it was up by 0.7%. S&P 500 was up 1.06%. Nasdaq was up 1.27%. We are expecting the CPI reports that is expected to be released tonight. We are expecting that number to be about 8.1% in August, falling from the 8.5%. If the numbers comes in at below that number, obviously people will be having better understanding of what might be happening to the inflationary pressure, that the Fed might be slowing down its interest rate hike speed. If that happens, then market can continue to go up further. However, though, still we are uncertain about the core inflation number. Uncertainty is that from the last month of 5.9%, it is expected to be further rising to maybe 6.1% because of the continued uncertainty about the rental cost and other items, excluding the energy side, where we see quite sharp decline so far. Clearly, the CPI number is very important. If that number continues to show a declining trend, then people might be expecting that the tightening policy of the Fed might be slowing down. In any case, the uncertainty about the economic recession of U.S., we don't think that that might be happening anytime soon, despite the long-term and short-term interest rate differential turning to negative, that some part of the yield curve is inverted, but nevertheless, we think that the lending of the banking sector is continuing to be quite strong, that we are seeing about 2-digit growth rate. And we also see that the credit lending, including the credit card, seems to be quite strong in the U.S., and therefore we don't think the economy is going to show a significant slowdown that as most of people are expecting. Overall, the valuation of the U.S. equity market, it is trading at only about 17 times P multiple. If the earnings are not going to be crashing because of the economic recession not happening anytime soon, then we think that there will be more room for the U.S. market to further rise despite the uncertainty about the inflationary pressure and the Fed's tightening.
Right. Well, Korean stocks today soaring even more. Interestingly, retail investors selling, institutions and foreigners are buying. It seems like a big sign of optimism in the market here, too. Both main indices, the KOSPI and the KOSDAQ, up by well over 2%. What's happening in the domestic equity market?
Yes, as you said, there has been quite significant net purchase happening by the foreign investors. Foreign investors net bought about 400 billion won worth of KOSPI and also about 100 billion won worth of KOSDAQ. And on top of that, they were major net buyer of the futures market by 1.5 trillion won worth of it. So they've been having huge position of the short selling or the declining trend so far until today, and they have changed their position quite aggressively so far. And while in that meantime, we saw retail investors net selling about 1 trillion won plus of the KOSPI and also 320 billion won worth of KOSDAQ. And also even the futures market, they sold about 450 billion. I think that this is probably a bit of a problem for retail investors. Retail investors have been continuing to be very cautious about the overall market. As you know, a lot of people are talking about U.S. recession and possibility of bear market trend, and so therefore the local investors continue to be the seller of this market. However, we see that quite a bit of a significant turnaround due to U.S. dollar weakening and the Korean won appreciating. And we think that the economy is in a situation that shouldn't be further depreciating in terms of the currency. And also fundamentally, we think that Korea is in a good position relative to other emerging markets. Overall, the external debt and also the consumer debt is a problem, but nevertheless, overall, the debt problem is not necessarily the major issue for Korea. So we think that the dollar weakening and won appreciating would affect positively to the Korean market. We think that this trend can last a bit longer in the future.
Well, speaking of the exchange rate, it came down a little bit today, the dollar losing some of its strength generally, though there are some saying that, as you just mentioned, that the exchange rate could keep going, could go as high as $14.50 to the dollar by the end of the year. What do you see happening with the exchange rate?
Right, just a bit of uncertainty right now. As you said, the Korean won has depreciated quite significantly to the territory that we haven't seen in a while. It did go up to as high as 1380 plus. As of today, it is at 1375.5, appreciating somewhat. I think we need to look at closely what's happening to the Korea's debt. If you look at the external debt of Korea at the end of second quarter, it's about $662 billion US dollars, which is about it's about 50% plus of the overall GDP, while the foreign reserves at 436.5 billion, which is about 24.3%. If you look at the foreign reserves as a percentage of external debt, it is at 66%. So therefore, we don't think that that is a major problem, even though the interest rate is moving higher. So we think that servicing debt is not a problem. But I guess the private sector debt is a bit of a problem, that the corporate debt to GDP ratio is at only about 117%, but the household debt to GDP is at 104.3%. So adding these two together, it's about 221% of private sector debt to GDP, while the government debt is only 47% of GDP. So we think that government needs to do more work to allow the household debt and corporate debt to stabilize in the future. In order to do that is not through, say, interest rate. So because U.S. interest rates continue to rising, meaning that the BOK needs to raise interest rate relative to the U.S. So obviously that's not the way to handle this, but rather we think that spending fiscal more budget is more important. But it seems that government is announcing that they will control the budget side because they've been spending more. I don't think that's probably the right direction to play this. We think that more support is needed for the domestic economy. Government needs to come out with the various policies to allow Korea's competitiveness to improve in the future. For the time being, we think the volatility is expected in terms of currency-wise. We don't think that Korean won can appreciate quite aggressively to, say, 1,200 territories, but it might be showing a very gradual process as the U.S. dollar weakens. And so therefore, we think that the Korean won should gradually appreciate to maybe 1,300 or 1,250 territories over the next 1 year period.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for coming on the program. We appreciate your insights.
Thank you very much.